Hey everybody, this is David Scarica. So today on Stock Chart of the Day, we are going to look at we're going to ask the question, are junior mining stocks one of the cheapest sectors in the market? Now, this has been a difficult decade, for many of us who do juniors. Now, what's incredible is I've had some deals go up 10, 15, 20 times. And essentially, and that's going back to 2016. I think I've had three deals that have gone up over 10x, which is pretty good in an 8 year period to have one every 2 to 3 years. They were Wallbridge, um, um, uh, uh, Aftermath, and Newfound Gold. So I'm pretty happy about that. I sometimes I look at my portfolio and I'm not, but this has been a very difficult time frame that ever since we had this great move in the 2000s in juniors, and then they crashed during the crash, and came back here. And again, I had another one do very well here. I've talked about this in the past. Tinka, that was the stock that went up that basically, bought, led to the purchase of my property. And then, we had this brutal bear market. Most bear markets last 2 years, 3 years. This peaked in 2011 and bottomed in late 2015. So this was a 1, 2, 3, 4, 5 year bear market. So no wonder I was depressed in the mid 2000s. And like I said, all this took was a couple of these little rallies here in 2016, 2020 to 2021. And I had a few deals explode in price. So of course now we're back here. So if you go look at it, the CDNX, which was the old VSE, which peaked at over 3,000 during kind of the commodities boom of the 2000s, is now 85% off its lows. Just think about that, 85% off its lows, right? So incredible. And then just that for inflation, we've had 15 years of inflation. Let's say inflation cumulatively has been like 60% in that time span. Like you're talking like that wouldn't put this in today's money about 5,000. So we're off like 90% inflation adjusted. So I think this is one of the cheapest sectors in the market. We have stocks like I've talked about, one of my sponsor companies, a company I own, Inca One, that are he's trading a tenth of revenues, and there's all kinds of other juniors trading at like very big discounts of what they have in the ground. So, you can see here that during the dot-com bust, they kind of went sideways. And the reason that is that there were some tech stocks in the TSC, or sorry, in the TSX or CDNX then, and they went down, but junior miners really started to go up in about 01, 02, and then exploded in 03. And this is what I've always said, that, we get these rate cut cycles, or like let's face it, actually when the market goes higher, combined with a rate cut cycle, like QE happened here, right? In 2016 when they stopped raising rates, or after the massive QE and cutting to zero rates here in 2020, and the market, so in every instance the market rallied. So usually that's what we want to see. Now, can they buck the trend in a bear market? Sure. If the Fed begins to aggressively cut rates and gold moves higher, that's going to help junior miners. But I just wanted to show you here, like if we do, let's just do a quick comparison. Like, let's see where like the CDNX is compared to the S&P, because large cap stocks have had this huge run. You can see it's as cheap as it's ever been. It's even cheaper than it was at the 2020 low. Or let's compare the CDNX to gold, right? Same thing. You can see, like, many of these things are resource stocks. And again, we're almost at the 2020 lows when we compare junior stocks compared to the price of gold. So what we're seeing is, yeah, the junior mining stocks are extremely cheap. And of course, there's all kinds of issues in the sector in terms of, it's capital intensive. They have to raise money and dilute like crazy. Because one reason, like I remember a stock I had, Paramount Gold, when it spiked in 2006, a stock that was on my watch list, Paramount Gold, when it got taken over, sold a property to Coeur d'Alene, it had a higher market cap whatever that was, at $1.50 a share, than it was in 2006 when it spiked to $4 a share. And essentially, like, that's what happens, because they, to drill up that property, they had to do private placements and issue shares etc. Right. So that's always the issue with these things. Why do you think Microsoft and all the big boys do stock buybacks? Because they're reducing their share flow. So actually, like a lot of these companies are actually, some of these companies aren't even at their peak market cap anymore. That have done a lot of buybacks because they bought back so many shares. Of course, you do the number of shares outstanding times the price. Now there's so fewer shares. I think IBM's like this. They're nowhere near their peak market cap. So, but anyway, I just wanted to show you this, like that the junior mining sector is one of the cheapest sectors out there right now. It's not just because I'm a gold bug. It's not just because I do a lot of raising money for juniors, etc. It really is one of the cheap sectors out there. So now is probably the time to look at some of your favorite juniors. Obviously, you want good management. They want a resource on the property. You want, if they are small producers, etc. That's what you want to look at. But I just wanted to show you that junior miners are one of the cheapest sectors out there on the market at the moment.